Morning, guys. It's Friday, August 29th, 5:26 a.m. Central Time. Grain markets are mixed this morning. Matt Bennett is here. Mackenzie, we were talking about this before we started taping. Yesterday's video got people riled up. The people are angry. They're furious and about everything. They're furious about if they're getting farm payments. They're furious. If they're not getting farm payments, they're furious. They're mad at me. Matt, one guy commented and he said, Joe, you're not qualified to talk about this. I'm like, do you think I went to the damn like master's school of YouTubery? Like, what the hell are you talking about? Anyways, people are angry and rightfully so. I mean, this stuff sucks, right?
It does.
It sucks. How bad does it suck? Scale of 1 to 10.
I'd say it's like a 8.75.
Based on the comments, you would think it was 99 out of 10. I mean,
well, it's bad, Joe. I mean, it seems to me a lot of these places I've been, people have been more upbeat than I expected. But when you get to talking to them, the level of concern is off the charts, and it's for good reason. I mean, I said this 26 would be the fourth year in a row that we burnt through liquidity.
Yep.
I mean, and I see it. I mean, I work my tail off the farm just to try to make things work, and so it's a rough go.
All right, let's get them riled up again. Let's talk about fertilizer and tariffs.
So tight supplies and tariff concerns have fueled a surge in fertilizer prices. Relative to grain and oilseed futures, fertilizer prices have risen to their highest level since 2016. The majority of U.S. potash imports originate from Canada and are exempt from tariffs under the USMCA agreement. However, tariffs on shipments from countries like Qatar and Saudi Arabia have tacked on significant costs. Republican Senator Chuck Grassley has argued that cutting fertilizer import tariffs would provide the quickest relief for farmers already squeezed by poor markets and rising input costs. This week, the Trump administration proposed adding potash to a list of critical minerals to encourage domestic production.
Chuck Grassley is talking about the fertilizer to corn price ratio. He must follow our friend Josh Linville on X because Josh has talked about that a couple of times. He's going to be on Tuesday in the premium stuff to get in a little bit deeper on fertilizer. Matthew, I pulled this chart from National Corn Growers. They had this yesterday. This is fantastic. Corn production cost over the years, and fertilizer cost is high, but it's not a hell of a lot higher than it was prior to the tariffs. I don't know that the tariffs, and people are going to say again, Joe, you're defending Donald Trump. The fertilizer prices have been higher and really spiked following Russia-Ukraine in 22.
Yeah, and here's the problem, Joe. The slide that I've been using to kind of go along with the slide very similar to this is that in 2022, your average cash price for corn was $6.54. And so basically what you've taken is about 33% out of the corn market, and your input costs, your total cost of production is the same. So everyone's getting their prepaid prices right now. And so whenever I'm out talking, I'm like, hey, how many of you guys have seen your prepaid prices? What do you think of them? I'm like, keep it clean from the crowd, because it's just not, it's awful. I mean, DAP's 850 to 900, anhydrous ammonia. I mean, a couple of weeks ago I was in Colfax, Iowa. Guy said, hey, if I pay by the end of the week, $720 a ton. If I wait till Monday, anhydrous is $820 a ton. And so, mez, you name it, potash, it's all sky high. And the problem is we just don't have any meat on the bone whenever it comes to what we're selling. So inflation's hit everything in ag other than what we're selling.
The spike in 2022 in general production cost had to do with, I think, a number of things. It had to do with Russia, Ukraine, perhaps. I think a lot of it had to do with just general post-COVID inflation. And then what happens with these fertilizer companies they're vultures. When they come in and they see that there's high grain prices, them and the equipment dealers and everybody else just jacks everything up and it never comes back down.
Absolutely. And that's you make a solid point, Joe. And so one question I continue to get is, what if I don't put fertilizer on this fall? Do you think I'll get relief by the spring? And Josh, you're right. Josh is freaking awesome whenever it comes to corn to fertilizer ratio. I've been talking about it for years, but he gets into the weeds and really does a good job of showing exactly what it is versus, whether it's phosphate, and you throw everything together too, if you want. But the problem with wait until spring, Joe, is that if we do get into a crunch on acres, which I think we will because of the lack of cash, first of all, the natural transgression from corn to beans, beans to corn, and just simply fertilizer costs. If you do take the price of corn higher to try to hold on to a few acres, not buy them, but hold on to a few acres, what's fertilizer going to do? I mean, fertilizer always goes up when corn goes up. That's what sucks.
Yeah. Here's another good chart from National Corn Growers. We're talking about break-even levels, and they kind of broke this down based on like where the national yield is and how it might end up. But no matter where the yield is, whether it's 191 or 179, farmers ain't making money.
No.
Not unless we get back up into the $5 neighborhood on the board. We're a long ways away, and input prices are a huge part of the problem. I mean, if this was pre-COVID, you could probably wiggle your way into some sort of break-even scenario with a corn price on the board, say like $4 to $4.50. You could probably make that work to some extent. You can't make it work now.
Right. And that's the thing is that a grower in 2022 could give a rat's rear end on whether they're paying way too much for fertilizer. Yes, they don't like it. Don't get me wrong. But when you're getting $6.50 for freaking corn, it's a little more palatable. The problem is that you don't have any profit margin right now. And so typically when fertilizer's sky high, it's basically due to the price of corn being up. I mean, you've alluded to that. I have too. When corn goes up, fertilizer goes up. This year, that's not the case. And so we're in a quandary. That's all there is to it.
Production cost doesn't ever go down, barely. I mean, you go back and look at the chart. It doesn't go down. It goes up, and it goes up, especially when the corn prices are up, but then it doesn't come back down, although corn prices may fall by 40%.
Absolutely.
All right, we've got some China news today, potentially.
So a senior Chinese trade representative, Li Chenggang, is in Washington, D.C. this week to meet with U.S. Trade and Treasury officials. The meeting is not part of a formal negotiating session. The visit follows Chenggang's 4-day trip to Canada, where he met with his counterpart to discuss bilateral economic and trade relations. Earlier this week, U.S. Treasury Secretary Scott Bessent said that everything is on the table in trade discussions with China. Earlier this month, President Trump called on Beijing to boost its purchases of U.S. soybeans. But as we've been talking about for weeks now, China has yet to make any new crop purchases.
Yep. So this is it too early to be concerned now, Matt? I'm slightly concerned. I still think they're coming. And I think you could make an argument that the sales to unknown are partially China, but still doesn't change the fact that nobody in total has bought a whole lot of anything.
Right. I mean, very similar situation to where we were at a year ago. And then they came in and bought like gangbusters. I guess it's a little concerning. I'm not going to say I guess. It is a little concerning that they've already sourced a lot of their September, if not all of their needs out of Brazil. Some of their October needs out of Brazil. But at the same time, I feel pretty confident they're going to step in and buy some beans. I mean, clearly, the administration knows that it's sorely needed to get some sort of a trade deal put together. I guess I go back to something we talked about. Maybe I think we talked about it on Wednesday, but I'd like to have more clarity here for the grower on something like a trade deal. First of all, a potential MFP payment, and I don't want to tick everyone off, but I don't know too many guys that are going to turn it down in an environment like this. It'd sure be nice to help them in their marketing decisions to have some sort of an idea what's going to go on, because the trade deal with China changes the trajectory of a lot of things, especially with the bullishness for soy oil, with the bullishness for the crush industry build out moving forward. In the short run, it doesn't look so great. Longer run, I think domestic usage goes higher, but we still need exports and a heck of a lot more than what we got on the books, which is basically nothing.
Somebody needs to sit this administration down and explain the calendar and crop cycles to them and where farmers are at right now. Like, hey, harvest is coming up in a few weeks, and in the South, they've already started. And you've got guys they have nowhere to go with a lot of these corn and soybean bushels. They're not priced. They're going to be forced to puke into lower price levels. They have no idea if government support's coming. They have no idea if a trade deal's coming. Something right now would be nice, just some clarity. And again, I talked about it yesterday. I don't love the government payments. I hate that this has to happen. I don't like the trade war. I hate that this is happening, but that's where we're at. And you'd like some clarity.
No, I mean, you couldn't have said it better. I mean, I don't have anything to add. We need to know, and we need to know now, because last year was an interesting year, but the farmer kind of needed to know that it was only a 179 yield before January.
Nice.
A lot of corn got sold way too cheap last year, based upon a lack of information, and I sure hope that that's not the case.
It could absolutely happen again this year in a similar or maybe in a different way and for different reasons. Yep. I wanted to show you guys this because we had a couple questions about it. People were commenting and they said, Joe, I thought we were going to be using all of our soybeans for biofuel. And yes, we are going to use more. USDA is projecting a record crush number for the new crop marketing year. So we're going to use, of all the demand for U.S. soybeans, 58% is going to be crush. But you've still got this 39% that's supposed to be exports. that's really lacking. And the problem right now is that with China absent, it's going to be tough to hit that export target. Although, again, it's early. Let's go to export sales.
New crop U.S. corn export sales were strong once again last week. Weekly net new crop sales were reported at 82 million bushels. The print was down 27% compared to the previous week, with Mexico as the largest buyer for the week. Net new crop soybean sales exceeded pre-report expectations at 50 million bushels. The print was up 20% from the prior week, with unknown destinations listed as the largest buyer for the week. Net wheat sales were reported at 21 million bushels. The print was up 12% from the previous week, but down 10% from the prior 4-week average. Vietnam was the largest wheat buyer for the week.
Let's skip the old crop charts. Here's new crop corn. New crop corn export sales are up 99% versus the same period last year. We're going to have a record program on the books, I believe, sometime during the next couple of weeks. We'll probably exceed 21, 22. We're still super competitive. It's great. People love to jump on here and say there's no demand for your products. Look at this.
Oh, absolutely. I mean, to me, I agree with you. We're gonna be on record pace. First of all, I think one thing to consider is that we're shipping a ton of corn to Mexico because Mexico's keeping cattle on the south side of the border, so we're shipping more corn to get down to them. So that feed and residual usage, we can't forget and residual because that's kind of like their wiggle room factor, if you will. But their feed usage is probably a little high if cattle are not coming across the border. It would be my concern. Demand's phenomenal. Don't get me wrong. But bottom line for me is that if you had to take a little bit of air out of the sales, I don't take it out of exports right now. I don't take it out of ethanol, quite frankly. I think both of those look pretty solid. But whenever you look over at feed and residual, depending on what they're using the residual part of it for, if it was just based on feed, you've got to think going up 200 is maybe a little bit of overstepping their boundaries.
Yeah. Okay. So here's new crop soybean sales, which is the opposite. It's a problem, second worst of the last 10 years. And some other global buyers have stepped up and bought a little bit more, but they just can't fill the void that China has left for the moment. And China, last year we had 3 million metric. China had like 3 million metric tons on the books at this time. They could buy that in a week when they decide to start buying. They could buy that in one day. It could happen fast. It just hasn't happened yet. We've got a river situation again, potentially.
We sure do. The Mississippi River could drop very low again during harvest. Government data indicates that river levels at Memphis will fall below normal by Tuesday and will be 3 to 4 feet below normal by mid-month. Rainfall, of course, has been limited in many areas of the Ohio River Valley in particular. Low river levels have been an issue during the fall in recent years and have resulted in higher grain transportation costs, an item that is often reflected in basis levels.
Very little rain over the last 7 days, and there's really not much in the forecast. Matt, we're going to do the drought monitor in a second. For this segment, talk to me just about the potential basis and cash market impact of a low river.
First of all, basis, especially when it comes to soybeans on the river, pretty much sucks because, obviously we don't have a huge export program on the books moving forward. And so basis on beans, interior levels are actually running as good or better than what you've got. And when I say interior, I'm talking like, for instance, an ADM Decatur in my part of the world, right in the middle of the state, long ways from the river. They crush the beans versus going over to St. Louis, which would be your export market. The export market, it doesn't look good. And so if you go ahead and take this down, two things, in my opinion, we got to remember is that, if you can't load barges all the way, clearly your transportation costs go up. That makes our prices FOB not near as attractive as what they would be if we can load barges in totality. The other thing, Joe, shipping fertilizer up the river, as if we needed more headwinds on fertilizer. It's going to get more expensive if you can't load barges in totality. So, yeah, I mean, and the other thing, my forecast, I don't even have a 10% chance of rain over the next 10 days, and I've kind of given up on whether we're going to get rain or not. So who knows, maybe we'll finally get one now, but it's dry as a bone. Most people's yards are brown in this part of the world, in a big part of the world in here. And there's no doubt that river levels are just going to continue to dwindle because with the tributaries have nothing to donate. I mean, it's just the river's going to continue moving lower, I'm afraid, until we get a major weather shift.
I'm sure that I understood this concept at some point in time, but I forget a lot of things. Why is it that this has become like an annual event the last 3 or 4 years? Is there any logic behind that? I mean, is it just lack of rain at the wrong time?
Well, I mean, 2 years in a row, one part of the country has been excessively dry in August. And clearly last year the Western Corn Belt kind of filtered. It certainly filters in whenever it comes to Mississippi, but this year it's the Eastern Corn Belt, and it's most of what you would call the Ohio River Valley. And so you've got not only the Mississippi, but you're going to call into question the Ohio, and so it's going to have nothing to donate whenever they meet up. I mean, it's concerning.
All right, let's jump to the drought monitor.
Rainfall was scattered throughout the Corn Belt last week, with the northern and western regions receiving precipitation, while the southern and eastern portions of the area were drier than normal. Because of this, drought conditions expanded in Ohio, Kentucky, Indiana, Illinois, and Missouri. The only improvement in conditions was observed up in Michigan. Across the High Plains, modest drought relief occurred in South Dakota, Kansas, and Oklahoma. When we look at the percentage of U.S. areas experiencing drought, corn country, 5%, soybeans, 11%, winter wheat, 31%, spring wheat, 13%, and cattle country, 15%.
So we're starting to see the drought show up in Ohio, which makes tons of sense. A little bit in Indiana, a little bit in your pocket of the world there, Matt, East Central Illinois, and then a lot of Kentucky, Tennessee, Arkansas, Missouri being impacted by drought. Here is the historical updated rainfall rankings of the last 133 years. A lot of the Eastern Corn Belt is among the driest on record for the month of August, month to date. Let's talk about the crops now, Matt. You would think that a rain in the Eastern Corn Belt or in your part of the world would be helpful, but they have not come to fruition.
No, I mean, and so on corn, the corn was like pretty close to the end of the race, if you will. And there's no doubt we've probably taken off some test weight, and there, you've lost some bushels. I mean, I don't want to be sensationalizing this thing because as of August 1, I'd have told you I had a record corn crop, is what I would have told you. I mean, it looked incredible. We've taken the shine off of it. Pretty common to talk to folks that say, oh, I've probably taken 15 to 20, maybe 30 bushels off the top end, but I had a record crop coming. And so it's going to be a little confusing figuring out the corn crop. I think where it gets super problematic, is the bean crop. I mean, this is a horrific time of year to be this dry. And so, just the functionality of it. I went out and looked at some beans this week of my own, and, top pods are flat as a pancake. I don't have enough moisture to fill all my pods. It doesn't appear. I think on our blackest of ground that, tends to hold the moisture a little bit better, of course, than the lighter ground. I think you're still going to have pretty darn good beans, but nothing like they would have been, first of all. And second of all, they'll be below our 4 or 5 year average here in this part of the world. And so I think this Illinois bean crop it's in Indiana and Ohio is going to have taken a pretty significant hit whenever it comes to bean yields. It'll be interesting how it pans out.
Mackenzie, what did cattle do yesterday?
Cattle futures finally took a step back. Live cattle were $135 to $625 lower. Feeders saw losses ranging from $250 down to $367, with the exception of the front month contract gaining 47 cents.
Still an absolute monster of a bull market, Matt. What are your thoughts?
I mean, I agree. I mean, it wouldn't surprise me if cattle went up another $20-$30, either fats or feeders. At the same time, I'm still awfully skeptical. I'm glad that I don't have like 10 pins of fats out here because I wouldn't sleep at night. I mean, guys that have tried to hedge it, they've made some massive donations. And so it's pretty easy to sit here in this seat and, hey, we need to do this risk management wise. But, I've just told my guys all along, buy cheap puts just in case, because most of them are sitting in really good shape. Where it's super problematic right now, you cannot functionally go buy feeders right now and feel good about it. There's just no way to do it, but guys are doing it, and I get it because it's been working. But at some point, it isn't going to work, and you're going to take some serious prisoners whenever it goes the other way.
Matt, thanks for joining us this morning, guys. The markets are closed on Monday for Labor Day, so we'll be off. Everyone have a wonderful 3-day weekend. We'll be back on Tuesday.